We are 6 months into 2025 and global gold prices have already surged nearly 30% so far. The yellow metal has outperformed traditional safe havens like the Japanese yen, Swiss franc and US treasuries. In India, the price has crossed 1 lakh rupees per 10 grams for the first time this year. The demand for gold has surged amid heightened global uncertainty and most recently due to the rising tensions between Iran and Israel. Prices have also been supported by global central bank purchases. As per a report by the European Central Bank, gold overtook euro as the world's second most important reserve asset last year. The central banks bought over 1,000 tons of gold for the third straight year in 2024, taking the total holdings to a huge 36,000 tons. Gold has accounted for 20% of global official reserves in 2024, while the US dollar remained the most important reserve with a 45% share. Hello and welcome to Commodity Champions. I'm Manisha Gupta, and over the next 30 minutes, we will throw the spotlight on the outlook for bullion as well as diamonds. Our very first guest is Shaokai Fan of World Gold Council. He's the head of Asia Pacific Division, except China, and also the global head for central banks for the Council. Thank you so much for being with us. And straight to the gold and the kind of survey that you've done for 2025, Mr. Fan, where you have respondents as the global central banks. What are they really telling you? The kind of buying that we've seen in the last 3 years clearly has been on the record numbers. But is that expected to continue going forward?
Sure. Well, first of all, thank you very much and good afternoon. It's a pleasure to be here. I think that our survey, which was just released earlier today, points to continued bullishness and optimism toward gold among central banks. As you mentioned, central banks have been buying gold in very large quantity, over 1,000 tons per year in the last 3 years. And despite higher prices, we've seen central banks still continue to buy during the first few months of this year as well. What our survey points to is that optimism among central banks for gold is going to most likely continue. 43% of the survey respondents said that they have plans to add gold to their reserves in the coming 12 months. And then 95%, so almost all of the survey respondents, believe that central banks overall, as a group, will add more gold in the coming year.
But do you think that the quantum would continue to be so high? Because 1,000 tons is what we've seen in the last 3 years. For this year, is there any sense that you at World Gold Council are making or anything that the survey throws at you?
That it would be a little bit harder to discern, I think, because one thing that we can measure in the survey is, of course, sentiment, attitude, bullishness, which is very strong in the survey. But what we don't measure, of course, is how much gold they might be buying. Now, we have respondents from all over the world in the survey. Some are big central banks, some are small central banks. But we don't know by design who said what in the survey. So therefore, we can't really extrapolate how much gold will be bought by central banks this year. Although the general view among my team and the World Gold Council is that central banks will continue to be net buyers and strong supporters of gold this year. We just don't know exactly how much they'll buy.
And what is the major reason that you see many of these central banks putting forth that they are adding so much gold to their reserves?
So one of the questions we ask in the survey is, if you hold gold, why do you hold gold? And we give them a bunch of factors and we ask them to say, is this a relevant factor or not for you? The top most relevant factor this year for central banks to hold gold was gold's performance during times of crisis. And you mentioned at the top of the segment about some of the things happening in the world right now. Honestly, in the last few years, it feels like the world has not really had a breather, from pandemics to wars to various different policy challenges and now trade challenges. I think central banks are navigating an increasingly uncertain and unstable world, and they're trying to seek ways to bring more resilience and more safety to their portfolios. And one way to do that is through gold.
We also do understand that when the global central banks start to buy gold, it is more a long-term thing. It is bought in a phased manner as well. So would you say it is safe to understand and estimate from your survey that this could go on for many more years to come?
I think there's certainly a lot more room for central banks, especially emerging market central banks, to add more gold to their reserves. On average, emerging market central banks only have maybe around 10% of their total reserves in gold. So there's more room for them to grow, especially as their reserves overall continue to grow. So although the survey doesn't ask, are you buying gold over a longer term horizon? I think you're right to say that central banks might have a buying program in place. They might have a target, and then they'll execute slowly toward that target until they reach it. So we might see some of these central banks continue to buy over time.
Mr. Fan, this is as per your understanding because you've been in touch with many of these central banks as well. For the longest time, it was 400 to 500 tons that we would see many of these banks buy Suddenly, it's doubled at 1,000 tons. Do you see this, at the higher side of the range, or do you think the numbers can get better as we go ahead? Because we clearly are living in a lot of uncertainty now.
Uncertainty, I think, is the name of the game these days. But unfortunately, it's just impossible to say how much central banks might buy. Unlike other segments of gold demand, where you can roughly say, let's say, Indian jewelry demand, for instance, it might be some function of GDP growth in India that year, how the wedding season might play out. You might be able to discern how much gold will be bought. There are only about 150 central banks or so. So you're looking at 150 distinct, discrete operators that have their own visions of how they want to run their reserves, their own specific domestic and international challenges. It's very hard to say exactly what they'll do, let alone what they'll do as a group. But certainly the last 3 years have seen over 1,000 tons of buying, and that was probably sparked by all the additional geopolitical instability brought about by the Ukraine war, which started in 2022. With all this uncertainty still spiraling out there, I think that that's still supportive of central banks and their desire to diversify their reserve assets and seek safety in gold.
Would you say that the gold prices, the way they have moved, also impacts global central banks in sense of buying? Are they price sensitive at all? Because when we hit $3,500 an ounce, there was an expectation that the global central banks perhaps could slow their buying until the price is correct. Do you see that as a phenomenon at all?
So central banks, like all other investors, do have some price sensitivity, maybe less than the ordinary investor might. Generally speaking, how a central bank might approach this is they have a mandate from their leadership saying, I want to increase gold reserves from, let's say, 5 to 10%. Now, you and the reserve management team figure out the most cost-effective way to do it. In this background of gold prices rising, of course, central bank reserve managers still need to execute that mandate somehow. So during the first quarter of this year, as gold prices rose, we still saw central banks buying 244 tons of gold on a net basis. There was still a lot of demand among central banks. As gold prices move higher, of course, we'll have to see how central banks react to that. So short answer is they're not price insensitive, but they do have longer term targets which they have to fulfill.
Just to get that number right, 244 tons has been bought by banks in this year until now, until May?
No, just in Q1, so the first 3 months of the year.
First 3 months, the first quarter that is. And I also want to understand, while there was a lot of mentioned themes, the reasons that the central banks are buying, would you say de-dollarization is one of them?
So when we ask about de-dollarization outright in our survey, it actually doesn't get that many responses saying that that's a specific reason why central banks are buying gold. But if you look at some of the broader factors, like I mentioned, gold's performance during times of crisis, its ability to act as a diversifier, the fact that it has no political risk, you can certainly see that central banks are trying to navigate this much trickier political environment on top of a trickier financial market environment as well. So while I think that the majority of the respondents aren't actively trying to de-dollarize in a political sense, I think that they are trying to add more diversity and more resilience in their portfolios, and they're trying to seek that through gold.
How would you also, apart from the survey, how do you also see China constantly buying for many months now, barring a couple of months when we didn't see those numbers update? And the other one is India. After a big gap, India started buying in the last few years and has continued to add as well. How would you look at overall Asia when it comes to global central banks buying, and specifically China and India?
So Asia has been a center of central bank gold buying, and most of the, if not all of the gold that's being bought by central banks has come from emerging market countries, with a big chunk of that coming from countries in Asia specifically. So to go to your two specific central banks that you mentioned, the People's Bank of China has been buying gold now for the last few months. There was a brief pause, but they've returned to buying. Of course, in previous cycles where they bought gold, they would not announce any gold purchases for a while, and then in 1 month they would announce a very large increase in their gold holdings. So we'll see how it plays out with China. Of course, they have very, very big reserves. And even with this most recent buying, gold is still a relatively small proportion of their reserves. So definitely room to grow. With the RBI, with India, they have been buying consecutively now for a number of months, even I think stretching over a number of years now. And they've added quite a bit of gold to their reserves. And they've been consistent buyers. Now, of course, I can't speak for their exact strategy and what their motivations and their target is. But, the fact that they're continuing to buy gold means that they certainly see value in adding gold to their reserves.
With the kind of situation that we are into right now, geopolitics is one part of it, but we did see a lot of gold move around ahead of those tariffs and after that tariffs as well. How have you seen that impacted the overall global holdings in sense of gold?
So in terms of the physical movement of gold, of course, at the beginning of the year, we had that dislocation between London and New York as there was fears of tariffs being placed on gold, which turned out not to be the case. For central banks, the decision on where they store their gold is also a very important decision. As you can imagine, a very sensitive decision as well. We do ask that question in our central bank survey. And the Bank of England, so London, is still the most popular location for central banks to store gold. But in this year's survey, we saw a pretty hefty increase in the number of respondents saying that they store gold domestically, so in their home country as well. And we've observed that trend over the past few years of central banks wanting to move gold away from certain markets and back to the home market, whether it's in response to geopolitical uncertainty, political risk in the country that might be holding the gold, or maybe some domestic concerns and domestic political pressure. We've seen the RBI, of course, move about 100 tons of gold back to India last year. So it's a theme that might be common, might be well understood by your viewers, but I think central banks around the world are also considering repatriation of gold too.
Oh, clearly that. Well, very, very interesting survey there and so many insights into that one, Mr. Fan. Thank you so much for joining in and taking us through that. Of course, this makes for a longer conversation, but we'll do that another time. For now, I really, really appreciate your time. And on that note, it's time for a short break as well. But don't go anywhere. We will be joined by two top Indian jewelers with their outlook on the other side of this break.